So, give us another example. I love where we're going with this conversation with just some examples of scenarios that you think
Yeah.
would be valuable for people to know about.
Well, one that I want to share with you, which is near and dear to my heart and is personal because it involves my son. So when my son bought his first house, I'd like to just high level walk you through the transaction that he did. Now, we're tied into a lot of real estate agents here because they're looking for deals for us all the time. And so we found a house that was priced really well. A hoarder lived in it. It was in the Seattle market, but in a good area. But the house was just full of stuff. The guy couldn't list the property. He had IRS tax liens. The IRS was coming in and probably going to foreclose on the guy. And so this was brought to us by an agent. And so, anyways, here's how the numbers worked on this house. And my son, who was 26 at the time, who was making good money, but like most young kids, doesn't have barely anything for a down payment. But he could actually afford a payment, but didn't have a down payment. So he wanted to buy a house. So this house came up. And so here's how this deal worked. And we call this Get Your Kid a Home Loan. And we've named it after this deal that we did for my son. And we've done a bunch of them since then. So we have real estate funds here that investors, how we get our capital is people put money into a fund and then we turn around and we lend it out of the fund and we give our investors a return. And I do the same thing. I put my own money into the funds too. And I have money sitting there. So my son wanted to buy this house. The house, we negotiated with the guy at about $400,000. Okay. The house was probably worth about maybe 550-ish at the time, but he had it full of stuff. He was going to get foreclosed on. And so we came to him and said, hey, if we can close on this in 2 weeks and we'll give you non-refundable earnest money of $25,000 right now to sign the deal. We'll close in 2 weeks. You can get rid of your IRS tax liens and you won't get foreclosed on. And this guy only owed a couple $100,000 on the house. So he's going to get a couple $100,000 out of it. And he said, great, I will sell at that price if you can close in 2 weeks and do all this. So my son, who had an income but didn't really have any money, here's what we did. Legacy, our company, came in and we made a loan to buy this house that we were gonna buy for $400,000, roughly, call it. And we lent him $400,000, 100% of what he was buying the house for. Now, Tim, we're not dumb. We don't do 100% loans. That's not how we work. But I, being his father, had a bunch of money sitting in our real estate fund here in Legacy. And so what we did is we collateralized $100,000 of my money against that loan. So now imagine we give my son $400,000 and he gets all the money. He pays cash for the property, closes on it. But I have collateralized against this deal $100,000 that's sitting in a real estate fund, but now is collateralized to that property. So if anything went wrong, we could go get that $100,000. That's the equity, okay? And then my son wanted to put in $50,000 to fix up this hoarder house, okay, which he did. And so we did our loan that we closed on, we made it a rehab loan. So then we gave him another $50,000 to fix the house. He redid a kitchen and redid a bathroom and did some finishing in the basement. So now the house is done. He's got $450,000 into it. I've got my money collateralized against it. It's all done. And he goes in there and he moves into the house and he lives in the house, for 2 years. Okay. And then he turns around and within 2 years, he has a house appraised that appraises at $750,000. He turns around and sells it the first day for like $760,000. He owed $450,000 at the time, right? And so he just made almost $300,000 on a transaction. And I guess the piece that I missed in there is after we closed our loan and he fixed the property all up, we had it appraised, and at the time that after he did the work, it appraised at like $630,000, and he owed $450,000. So we did a rate term refinance, and he got a $450,000 mortgage. At the time, it was 2.5%, and which was when rates were at their lowest, and so his payment was super affordable. He had financed the property 100% and he sold it 2 years down the road. And how many 28-year-old kids have $250,000 to $300,000 in their bank to go buy the next one? And my money got released at the time that we refied it, because when we paid off the original loan, I get released. So it's kind of getting around gift funds and all that. But the best part about it was he wouldn't have been able to refi out of it if we didn't have the $450,000 loan against it because it turned into a rate term refinance, which you can go ahead and you can refinance out of it. Had he wanted to, if the loan had been less, he couldn't do a cash out refinance. But in this case, because we lent 100%, he could come in and do a rate term refinance as long as the property appraised higher. So this is how my son started. Now he's owned 3 homes since then. This levered him, to get into more deals. And if you're a mortgage guy putting together that interim deal for a youngster to get a house, then you get a takeout loan behind that when you got to pay off the interim loan that got the deal done. And you got a real estate agent that's just going, the real estate agent that was involved in this that brought us the house is like, I've never heard of anybody doing anything like this. This is crazy. But the funny part, Tim, is us as a lender, what a great secured loan. We had plenty of equity because we secured it to a fund with an extra $100,000. So, I'm on the hook a little bit with my kid, but at the same time, what I didn't have to do is give my kid gift funds and then have to try to come back later on and have him pay me back or something like a lot of parents do. And
So,
my money, yeah.
so let me ask you a question on that. So let's remove you from the scenario.
Yes.
We'll replace you with me. Let's say
Yep.
that I bring my son in the exact same deal.
Yep.
That's going to require me to invest the $100,000 into your fund, correct?
Yes.
And
Yep.
when I'm invested into that fund, am I also getting the return that you pay
You're
out
getting
to other
10%
investors?
interest on your money while it's in the fund.
Oh man. Now my mind is blown.
Yeah.
Because,
Yeah.
yeah. So wow. Like if I'm an originator and I could talk to all of my past clients in my
Yes.
database that have kids that are in their
Yes.
20s and offer a program like this and say, and I could get you a 10% rate of return that is,
Yeah.
pretty damn secure because
Yeah.
this is a fund that's been performing for years and I show the performer on the fund. And this is a way to get your kid your new home.
Yeah.
Wow. In fact, we may need to talk offline about me doing this for my son. This is I'm really glad you shared that scenario. Wow.